Good morning and a happy Monday. Welcome to today's episode of Morning Well. Three things that we will talk about. Best weekly performance since April, earnings that have come in better than expected, and the week ahead. Joe Biden is president-elect, and Biden's win carries both good and bad news for stocks. The good, going by history, buoyant markets tend to stay that way after a presidential election, at least for a while. So since 2000, every time the S&P 500 was heading higher into election day, November and December have come in the green too. The bad, the virus is ever present, sky-high corporate valuations, and political pressure to dismantle at least some of Trump's policies that have really helped keep the markets afloat all these years. The next couple of weeks will be crucial to get a sense of how the presidency is going to be. We will also be looking at how the Senate race kind of plays out in Georgia and its impact in policies. So interesting couple of weeks ahead. On Friday, although stocks wobbled, the S&P 500 and Dow Jones gained about 7.3 to 6.9% respectively for the week. Nasdaq was higher by about 9%. All the three had their best week since April, when US stocks were first rebounding from the pandemic-fueled plunge. As investors jumped into the stock market, some widely popular and risky trades also did well. Bitcoin prices rallied, crossing 15,000 threshold for the first time since January 2018. Traders bought derivatives tied to the CBOE volatility index of VIX that would profit if volatility fell even further. The gauge plummeted last week. Investors are betting a Republican Senate would limit Biden's tax and stimulus plans. That will have ripple effects on capital gains, interest rates, and even monetary policy. The fate of the Senate control will hinge on two runoff elections in Georgia in January. Tech stocks climbed last week on bets that antitrust fervor will die down. Healthcare stocks rallied on lower chances of big changes to government health plans. Regional banks, however, dropped on lower probability of a big stimulus package, which actually pushed the yields lower, and a steeper yield curve generally helps banks, but the yield curve became flatter, which really didn't help them. On the one side, we're dealing with how the presidency and the Congress is playing out, and the other is the earnings, right? So with most of the companies in the S&P 500 reporting, analysts are projecting third quarter profits fell 7.5% from a year earlier. This is according to FactSet. This is a sharp improvement from the 21% decline they forecasted at the end of September. Last month, investors largely appeared to shrug off the improving earnings as corporate results rolled through in October, a month punctuated by campaign developments and worrying virus news. The S&P fell about 2.8%. Shares of companies that reported stronger than expected profits for the third quarter inched up only about 0.4% on average from 2 days before their report to 2 days after, compared to a 5-year average of about a 0.9% increase. All of this is according to FactSet. Then, as election results suggested that Congress might be divided and less likely to approve major policy changes, the market shook off its lethargy. The broad US index surged 7.3% last week. That's the best weekly performance since April. The earnings beats are honestly widespread. 86% of the reporting S&P 500 companies have exceeded estimates. Analysts have also lifted third quarter expectations for all the 11 sectors of the S&P 500. Corporate earnings are the biggest driver of stock returns over the long term, though in the recent years stock prices have climbed much faster than the profits. Analysts expect earnings will decline 11% year over year in the fourth quarter before beginning to climb again in the first quarter of 2021. Just in terms of price, now that we have a picture of the earnings on the price to earnings side, the S&P 500 traded Thursday at about 21.8 times its projected earnings over the next 12 months. That's above the 5-year average of about 17.56. Valuations are higher among the tech darlings. For example, Apple is trading at a 29.9 times expected earnings, which is well above the 5-year average of 15.05. While the earnings picture is improving, some may argue that the price is much higher than this improving earnings as well. So it depends, and how it remains to be seen how this thing will play out. over the next couple of years actually. The week ahead, McDonald, Infineon and Occidental are among the earnings highlights that we're looking out for today. Adidas, Lyft and BioNTech will feature tomorrow, followed by Disney, Tencent and Siemens on Thursday. JD.com is up on Friday. Apple will show off its new Macs on Tuesday in a virtual event dubbed One More Thing. The computers will feature in-house processors for the first time, replacing Intel chips that have been a mainstay since 2006. Alibaba's Singles Day is set for Wednesday, the online shopping event, which dwarfed the Black Friday and Cyber Monday in 2019 with sales of about 38 billion, is expected to see its largest international presence ever as some US merchants debut in the Asian market. The RBNZ will probably leave its official cash rate unchanged on Wednesday, but introduce a direct funding program for banks that will lower borrowing costs, is what Bloomberg Economics is expecting. That's the update. Stay safe and healthy. Have a lovely week ahead, and I'll speak to you tomorrow.